Now, meanwhile, the president called Jerome Powell a fool on his Truth Social account, and that was after the Fed chair held rates steady yesterday. But the past few weeks have seen less volatility on U.S. markets, so is Wall Street now getting used to the president's combative style? Robert Schein is Chief Investment Officer at Blanke Schein Wealth Management. Robert, markets certainly feel good about the prospect of a U.S.-UK trade deal and the U.S.-China talks to come. What do you think they're likely to make of the day's news going forward?
Right now, it's a positive. If we look back just a month ago, markets were in turmoil, clearly sending a message to the administration here in the United States and global markets that the uncertainty, the global tariff talks were not welcomed or not, at least in the manner they were delivered and communicated. But we've covered a lot of ground right now. So today marks a really good first step into opening up the negotiations with a great partner and sitting down at the table and really hashing out a framework that, quite frankly, was long overdue on both sides.
Now, the markets, as you mentioned, have certainly tolerated a lot of volatility when tariffs were first announced. But now, as we see the U.S. perhaps maneuvering closer to a deal-making stage, what is it the U.S. is poised to get out of this?
At the end of the day, I think it's a level set of expectations. I believe, and I believe the administration believes, that once they see through the negotiation process, that'll bring us stronger together, not only as a trading partner, but as a global partner, as we all need to work together, as we always have for, over centuries at a time. So I think this is very positive, having the UK be the first out of the gate. Not only is symbolic, but it's also, I think, a smart move on both sides. And it sets the tone and the table moving forward for other countries as the U.S. tries to level set expectations.
Now, Fed Chair Jerome Powell was asked squarely yesterday by reporters whether President Trump's comments affect his decision-making on interest rate cuts. He said not at all. President Trump had backed off those comments, but today he's back at it. How does this relationship move forward?
I think the Federal Reserve Chairman needs just to stick to his guns and ignore the noise, whether it's a tweet or a headline comment. I mean, they ultimately need to hold the line and maintain their optionality. Quite frankly, in the U.S. right now, if we just look at the current inflation data, the PCE is one of the inflation reads that the Federal Reserve Chairman uses. We're still high. The 4-month read is 2.9%. If you go back to the first Trump-Powell 1.0 term, that data that gave cover for Powell to lower interest rates during Trump's first term, that number was at 1.8. So we're below the 2% level. And I think that's what Jerome Powell is kind of holding his optionality on. Now, at the end of the day, it complicates the Fed's calculus. Yesterday, they added in additional language. They talked about the labor markets being still strong, inflation being too hot. They also said, what's the impact of the fiscal reforms that we're going to see in the U.S. by way of tax cuts? And ultimately, what is immigration? How does all that calculus play in? But the reality for the Fed right now is if they wait too long, they do further damage to the U.S. economy by slowing growth. But if they go too quickly, they open the door for inflation to resurface potentially and lose credibility. So I believe it's the Federal Reserve, it's Powell's Braveheart moment to hold the line and see where this plays out. But he's just trying to get all of the information to make the best move moving forward. And it's still an unknown at this moment.
All right, Robert Schein, thank you.
Blanke Schein Wealth Management is a group of investment professionals registered with HighTower Services, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanke, Schein Wealth Management and HighTower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanke, Schein Wealth Management and do not represent those of HighTower Advisors, LLC, or any of its affiliates.